Everyone, this is Hunter Satterfield, one of the partners here at Kane Waters and Associates, as well as the Chief Investment Officer. Joined today in a new format. Just for today, we are about to go into our CWA Investment Committee. So today I actually have in the same room Brad Sanders sitting here to my left, the Managing Director of Tectonic Advisors, and then of course Brian Bortz, my fellow partner and the head of our investment committee, which again we'll be having here shortly. They're joining me today to talk about the month of May. So for the month of May, the S&P 500 was up right at 5%. Global stocks were up 4.1%. Domestic bonds were up 1.7%. And global bonds were up 1.3%. So Brad, I want to come to you first during this conversation. Talk a little bit here as we get through really the first half of the year. We're headed into the summer. You guys at Tectonic at this point have had multiple conversations throughout the year with the managers that are directly managing the money for our clients. What are the types of things that they're telling you as we get halfway through the year and as they stare at the remainder of 2024?
Yeah, I think unsurprisingly, you're getting some mixed messages from them. Overall earnings, first quarter earnings, which we're just wrapping up earnings season, so that's why we've been talking to a lot of them, have been, I would say, on the margin pretty positive. You have big directional moves in stocks though, which to me is the sign of a market starting to get tired. Like a company will come out and if they beat, the stock's up 20%, and if they come in line or they miss, it's down 20%. You just have these huge wide-ranging moves. And a lot of the return in the market's kind of combined to six stocks. Like six stocks make up 70% of the return of the S&P. So we've been talking to these managers wanting to hear what they actually hear from companies, because then we're kind of getting a feel for the economy as a whole. And I would say that what we're hearing in general is the consumer is probably a little tired here. I don't think that's a shock to anybody. If you look at credit card debt, where interest rates are, it kind of disproportionately affects the largest part of our middle class and lower middle class. And so discretionary income's kind of drying up a little bit. But on the positive side, what we've heard is, especially from some of our small cap managers that are dealing in some sectors that aren't as widely covered as maybe like big cap tech and these things, is that you're starting to see prices for some goods actually come down. One of them mentioned there's like an electronics, they provide electronics to construction companies and government institutions that do like road work and stuff. They have like a 20% price reduction across the board for like all products. Now, the positives is that's going to keep inflation on a downward trajectory, which will be helpful going forward and will ease that pain on the consumer. But a lot of that's demand driven too. So I think kind of our message is, yeah, May was up 5%. This market's super resilient. You have to stay engaged. You have to stay invested. You just want to do it in a smart way. Make sure you understand what you own and be prepared for volatility. And I think that's going to be the message for the rest of the year, is kind of like last year. You know, last year we ended up in a great spot market-wise, but it didn't really feel like it. It was a bumpy ride the whole way. So I think that's kind of, as we move into the summer, that would be my message to our clients, is get ready for some bounces.
Yeah, and I would say we have such a good opportunity to have the insight that you have to be able to meet with the managers and things like that. So listeners, when you guys are listening to this, it's such a wonderful opportunity to hear kind of what the conversation is behind the scenes. And you know, when you talk about the manufacturing index prices coming down, I mean, that's a clear sign that inflation is moving in the right direction. The Fed's not going to do anything about it. The Fed's probably not going to cut rates this year, and if they do, it's probably going to be at the end of the year.
We're still expecting zero.
Yeah, and so I would think, you know, you look at this market, looks like it's in the cycle where small caps are starting to make that quicker turn. There's a lot of opportunity in the smaller company stocks as opposed to some of the large company stocks that are leading the way, those six that you talked about. And so that's usually the time in the market cycle where things start picking up and looking pretty good. I'm very optimistic about where this market's headed. It's just going to be really volatile. And I think they're going to you have geopolitical issues, you have election issues, and not just in the US, I mean globally. And those things are going to impact our economy. But like you said, we have a really resilient economy right now. So I feel really positive about where we are, and specifically about where you guys have positioned our portfolios.
Yeah, I would just add one other area we're really positive on, and it's kind of been neglected probably on this call, is the bond market. The bond market's doing the heavy lifting for our investors for the first time in a decade. Since my career here, I started in 09. You can get corporate bonds yielding 6%. Like, that's a completely different environment than we've been in the last decade. But just nobody wants to touch it because of what's happened the last 2 years. But that's a really good sign for our portfolios going forward, that you actually have a real rate of interest north of 5% on your bond portfolio. And that's going to make returns, even in a volatile environment, easier to get, in my opinion.
Yeah, I think, as we head again through the rest of the summer, hopefully this has been a really helpful conversation on what those investment committee meetings look like. We're bringing you information, obviously, on what the market has done and what we are sort of looking at going forward. But this is just a small glimpse at what we're about to go into, which is our full committee meeting. So this has been your May update. Some exciting times again headed into the summer. We will be back in front of you at the end of June. Thank you so much.